just before the data, you always get this sort of lull, bang, there's the data. Right, so data's come out. There's a large order. That's something people worry about. If we blast through that though, if we can trade through that large offer, then the market's got space to move higher. We've broken 86 now. This is where you can start to become much more confident. Really what you've got to look at then is, well, when are you going to transact? You're starting off around here. So around about the 95 area. The obvious play is on a break higher through 08. You continue up towards 24 from the previous day and potentially even up towards recent highs. Downside, however, assuming that this is not a significantly higher +4, anything that drops could drop into this zone down here. That is the zone between previous day's low and previous day's VPOC. That's the area that we're interested in. We drop down here, you're expecting this type of movement. And so this area down here, which is 77 to 85, is your zone to then have a go at buying. So that's the way that you go and try and structure these trades. Keep it very clear. So you go into it with a plan. We do this for every piece of data. Obviously, this is only a situation right now. These types of things change. And you've got to look at the wider structure in the S&P. So this is not the entire story, but broadly, that was the area that we're looking to try and buy. So I'll go and show you what exactly happened, how exactly this trade actually played out, and what you would want to realistically be doing on it. So I'll bring up the ladders. Crucial thing to point out here. When you're trading data, you want to have multiple markets up. What you get to see is across all markets. So you see the reaction from bonds. So what I have here is a 10-year bond, and then I've got US Treasuries, 30, 10, 5, and 2. I've got the S&P, NASDAQ, Euro, and gold. I want to see the reaction across multiple markets to see the correlation. That's for another webinar on correlation. But what we're looking at here predominantly is the S&P over here. So this is the S&P. And that's the one that the plan is we're going to buy this if it does dip down into that area. So basically below 85. Get below here. And then you're looking at, well, how do you execute that reversal? That's the skill behind this. When do you get into this trade? So what I'll do, I'll click play. We're just before the data. So almost immediately, the market is going to react. And we know what's going to happen. It's going to go down. So here we go. Just before the data, you always get this sort of lull, bang, there's the data. Right, so data's come out instantly, actually, long T-note. Now, this is a separate trade and something that's beyond the scope of what we want to cover here. But nevertheless, this was a quick attempt at a buy in T-note, looking then to buy a little bit more further down. Now, the S&P is down into that 78 area. So remember, the levels at 85 to 78. Now, the way that you play this is one of two. You can either just buy the level. This is the idea. You just buy and assume that we're going to bounce. Alternatively, you're looking for the break above 85. And that's what the trade is just here. So now currently long at 86. There's a large order. That's something people worry about. If we blast through that, though, if we can trade through that large offer, then the market's got space to move higher. So in this situation, we've traded through it, again, trying to push higher and adding on to the trade. Your risk, ultimately, you want to see that this stays above 78. So there is a risk in terms of the way that you execute this down here, because if we drop down to 78, could well be taking a loss on this. What you also want to watch is, where does the market rotate back to? We keep on coming back to around 82, no lower. So that's helpful to sort of understand that as long as we're staying above there, this looks okay towards the upside. We've broken 86 now. This is where you can start to become much more confident. Now, remember, the move started at around about 95, 96. So we just ticked up there. We just traded 95.5. And what you want to see here is whether this is a move that can actually take that out. So it's touched it, comes back. You don't want to get out immediately. We want to see how it's sort of trading when you get up there. So a provisional offer at around about 97.5 to see if the market will actually go up. If it blasts through that, then you can be very, very confident of a continuation type move. If it really struggles there, then you're going to look at this and think, Well, maybe I can bring it down towards 95.5. So market still is reasonably stable, but you will have a lot more confidence now coming from the fact that we are holding distinctly above 86. The treasuries are also starting to tick back higher, in particular the 2 and 5 year. So all of these things are stacking up to make you feel reasonably confident about this trade. Your next obvious goal on this one then is to go and have a look for the recent higher 8.5. And so this is one way of approaching it for a very sort of quick, short-term trade. We're going to try and buy that dip as we come back up, scene of crime, i.e. where the move starts, and then break of the high or touch of the high. So that's what you're aiming for in this situation. We've got up to the high nearly. We've just got flicked out of that trade. The job is done. Now, of course, there are further trades onwards from this point, but that initial movement, that's how people are going to try and attempt to take these types of trades on. You don't have to wait and wait and wait after the data. If you've got a clear plan, you can execute this straight away. And we do this every time during the 6-week course. It'd be CPI, be payrolls, central bank data. We'll do one of those as well to look at, well, how do you prep for this? What are you going to do? How are you going to execute it? And then go and actually trade it. It's a great way to get people to understand how to actually execute on data and what the importance of data really is. So if I bring you back very quick, that's what we ended up with. This was the move that we just looked at, taking the dip down, buying it on that reversal to then take out the high. So the job is done in 2 minutes, 3 minutes. It's a very strong winner or very solid winner in 2 or 3 minutes. You know, with a couple of lots, you're pushing well over $1,000 on a simple trade that, as long as it's well planned, you can execute on. The continuation of this then goes on throughout the rest of the day. Yes, you get a deep pullback on the cash session open. This was another trade that we actually looked at, planned out, and executed on the 6-week course as well. Before then, the further large continuation all the way up towards 47. So pretty dramatic move throughout the rest of the day.